Hi there, good afternoon. You tune into ET now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. A very good afternoon to you, Vinny. And if you look at the way how the markets are moving in today's trading session, pretty subdued trading session coming in for the markets, and also range-bound trading session coming in for the benchmark indices. We've been flip-flopping between the gains and the losses. Right now, we've just managed to inch higher from the day's lowest point. That's the benchmark indices for you. Nifty, that's trading with flat gains right now. Also, let's take a look at what even the broader markets are doing, because that one has been actually outperforming the benchmark indices. Take a look at what small cap index has been doing. That one was seeing gains of almost 0.5% last time I checked, and it's sustaining those levels. That's the small cap index for you. If you look at Nifty Bank, that was moving in tandem with the benchmark indices. Is the IT index that will be in focus as well in today's trading session. That one was actually posting gains upwards of 1.5%, right now 1.4% at the day's highest point. Realty index, that one was lagging in trade today. If you look at the realty index, last time I checked, it was trading lower by about 1.5%. Now it's 1.8% downtick coming in for realty index. So that's the way how the markets are looking like at this point in time, Winnie. If you look at the benchmark indices, it's pretty much subdued coming in for the benchmark.
Absolutely. Subdued coming in for the benchmark indices, but Cheryl, there are a lot of individual movers, and that's what we're going to take you all through in the next 1 hour as well. Either it's going to be on the back of news flows, earnings, or even on the back of technicals as well. And on the technicals, we are joined by Kunal Bothra, while from the research team today we have Ashesha as well as Lisa joining in with us. A very good afternoon to all three of you all. Good afternoon to you as well, Cheryl. I'm glad to have you back today. But yes, the first stock that we're going to be starting with is Gujarat Gas. And why is Gujarat Gas is in focus is that they're going to be actually benefiting from the higher propane prices, and now Aramco has increased the prices for propane prices by to $470 per ton from the previous price of $400 per ton. Now these new prices are going to be applicable from September 2023, and the hike by Aramco is actually will increase the propane prices in Morbi region as well, as what we are getting to understand. Now this from September 2023, the propane prices in Morbi would be somewhere around rupees 40.3 SCM versus previously that was rupees 30 in the month of August. So surely keeping an eye out on that, because Gujarat Gas is selling gas at a price of around 38 rupees SCM. So keeping an eye out on Gujarat Gas today, as of now, given up all those morning gains and trading almost flattish, which is gains of 0.1% in trade, Cheryl.
All right, that's Gujarat Gas for you. Pretty much subdued in today's trading session. But yes, it did see that uptick in today's trading session as well. But let's talk about Equitas Small Finance Bank. And why is this particular counter in focus in today's trading session, Vinny? If you look at the stock, it's actually sulking in trade. Third day of losses coming in for Equitas Small Finance Bank. And this after a block deal actually took place in today's trading session. About 50 lakh shares actually traded in a single block. And that was at a price of around 92.7 rupees per share. So on back of that, you have Equitas Small Finance Bank that is subdued in today's trading session. No doubt we don't have the buyers and the sellers name as of now towards the day end that we are going to get that name. But yes, keep this one in focus. Third day of decline coming in. Now the stock is trading lower by about 2.7%.
Okay, let's move on and talk about the first stock on the technicals. And Kunal, you've picked out NTPC for us. This one has seen a good run up, whether you look at it in the 6-month period or 1-year period as well. And then just in the last 6 months, it's moved up from around those 160, 170 levels to 224 today. What is your view now on NTPC? What is the upside that you're seeing here?
Vinny, so the stock has seen a good run up in the last couple of weeks from 160 to 220 to 25. But the reason for pointing out NTPC today is that the stock, even though it's in the thick of some extreme momentum, has hit overbought levels in most of the indicators on the daily charts, which means that from current levels over the next 1 to 2 weeks, the stock should see a pause as well as a mild correction for itself. Now, when indicators get into such kind of an overbought territory, the prices, even if they are going through an exponential kind of a rise, the halt for the price is very immediate. So I would expect that the stock would probably cool off towards 215 to 216 odd mark on an immediate basis, and if the correction trickles down to other stocks in the same space, then I believe that the fall could be a bit more steeper for a stock like NTPC. So I think it's a good time where traders who have been holding on to long positions to actually book out profits on stocks like NTPC and look to buy back at lower levels.
All right, moving on then. That's the take coming in from NTPC from Kunal. But let's talk about KEI Industries. And Lisa, this one is an earnings candidate. And how are the numbers for this particular counter? And does that actually merit such a stock reaction?
So right, Cheryl, KEI industry is reeling under pressure. Actually, the numbers, they came in largely in line with the estimates. Talking about the revenue, that was up around 13.9% and stood at 1,793 crore, while the EBITDA margin, that was steady at around 10.4%. EBITDA, that saw growth of around 10.4% year on year. And talking about the segment, it was their housing and wire segment which saw good growth, and that contributes around 31%. Their LT and HT cable, that is low tension and high tension cable, that which contributes around 52% to their revenue, that saw a growth of around 13% and 14%. But what didn't work for the company is the underperformance versus their peers. So the cable business that grew just at around 13%, but if we compare it with Polycab, the Polycab's cable and wire business, that grew at a whopping 48%, while Havells cable and wire business, that grew at around 24%. So that is why we can see KEI industry, it's tanked in trade today. It's down around 6% in trade, but on in the last 1 year, it has given good returns of around 82%. So that's on KEI.
Okay, that's on KEI, keeping an eye out on that one. But one more earnings candidate, and this is showing a different move, that's Go Fashion, because it was shining and glittering in trade today, Ashesha. What were the numbers like, and what is it that you're understanding even in terms of commentary from the manager?
Well, yes, very strong set of numbers, and the commentary is also quite optimistic. In fact, at one point in time, the stock was gaining as much as 10%. It is off the highest point of the day, and even now as we speak, the stock is up nearly 5.5%. Revenue saw an uptick of 15% on a year-on-year basis. Margins also expanded by about 150 basis points. Management commentary, as I mentioned, is quite positive. They say that they are targeting 20% plus revenue growth for the coming quarters. Third quarter is expected to witness healthy growth. As far as price cuts is concerned, they say that no price cuts were undertaken by any player in the industry in the quarter gone by. They are exploring omni-channel engagements, and they reduced inventory by as much as 19 days in the preceding quarter. So yes, very strong set of numbers. Commentary is also quite positive, and that is what the stock is reacting to, 5.5% higher in trade for Go Fashion.
Exactly. Strong commentary coming in from the management. In fact, let's actually listen in to what the management had to say when we spoke to them about their numbers, especially about the margins. Where do they see it going ahead?
See, I think we've delivered good margins. We've delivered about 32 to 33% of post-Ind AS EBITDA with about 13.8% of PAT. So I think on an annualized basis also, I think we will be pretty optimistic that we'll be able to maintain these margins. See, because these margins for us come down from gross margins, and our product usually are sold on full price. With such a high full price sales ratio, we see our margins consistently maintaining at a gross margin level and also at a PAT level.
Okay, let's move on and talk about Tata Power on the technicals and charts. And Kunal, Tata Power in the last 1 week surely has seen a bit of a spike up, coming in 10-11% return in just last 1 week. Now, what is it that you're seeing for Tata Power? Is this run up that we're seeing still going to continue for Tata Power?
Well, it seems like, because this is the fifth consecutive month for Tata Power where it has gained from the previous lows in the month of March. So in the month of March, the stock was almost at 180, 182 levels. That was the low for Tata Power, and from there it's now climbed back to that 240 levels. It's still away significantly off from its previous lifetime highs of 50-week highs. I think 275 plus was the level for Tata Power. But then the recovery in the last 4 months, 5 months indicates that the stock should see more leg on the upside. Now, interestingly, the stock has broken past above the 200-day moving average sometime back. It's given a sign of a golden crossover where the 50-day moving average has crossed about the 200-day moving average. And the volumes in the last couple of days has also started to intensify or increase for Tata Power. So on the back of this, I would expect this momentum to continue. 255 to 60 broadly could be a range of a short-term target for Tata Power. Traders could look at holding on to long positions. Keep a trailing stop loss of 235.
Okay, keeping an eye on those levels for Tata Power. But let's talk about an earnings candidate, and we have India Pesticides that's in focus. And they reported a weak set of numbers this time around in Q1 when you look at it, and that is why we saw the stock price in early morning trade fell as much as 4 to 5%. Slight bit of a recovery, but still seeing a decline of 2% even as of now. Now, what the company has said in terms of commentary, and what they've said is that they are attributing this weak quarter to multiple headwinds such as unfavorable macro scenarios, and you have subdued volumes, high cost inventories, and steep price drops due to the oversupply supply of raw material in China are some of the factors that are impacting the company. In terms of the profits of the company, we are seeing a decline of as much as 62% on a year-on-year basis for the agrochemical company. Even the revenues of the company, that has also seen a decline coming in as well. That's down almost 7 to 8% as well. And margins have seen a contraction, a sharp contraction in terms of margins. 11% is what the EBITDA margin came in at versus 25.5% last year. So yes, weak set of numbers reported by India Pesticides, and that's the reason we're seeing a fall coming in the stock price as well today, Sharon.
All right, that's one counter that is sulking in trade. But Vinny, let me talk about a counter that is soaring in trade. 11-month high is what Berger Paints touched in today's trading session, because they informed the exchanges that, well, they are going to be considering their earnings on August 9th. Along with their earnings, they are also going to consider bonus share issue. So after that particular development of the news, you saw a sharp spike in the counter, and also it is sustaining those gains. 2.3% uptick coming in for Berger Paints. And let's not forget that stock actually hit an 11-month high in today's trading session. So Berger Paints is a counter you need to focus on. August 9th is for earnings as well as for bonus share issue.
Okay, let's move on and keep an eye out and focus on Tech Mahindra then. And Kunal, on the charts, what's Tech Mahindra indicating to you? Anything exciting that we could expect from Tech Mahindra in terms of a run-up?
So in the last fortnight, the stock corrected from 1250 levels to 1100, and I think in the last fortnight we saw many of these IT stocks deliver results, and we've seen corrections for most of these IT majors. Now from 1100 levels, the stock has gradually and slowly moved towards the 1150 mark. More importantly, it's retraced 38.2% of the first retracement, which we typically look out for as the first sign that the stock would get into a bit of a turnaround mode and the turnaround could sustain. The second resistance for the stock Tech Mahindra is now at 1175 mark. And if that gets taken out, then we could be expecting a stronger up move which can come back into the IT pack. What we are also seeing today is many of the other large cap IT stocks trying to participate. Even the mid cap IT stocks have shown good recovery in the last two trading sessions. So this could probably be a strong IT move, maybe some sort of a short covering move which could come back into these IT names. Tech Mahindra looks attractive. 1175 could be the next target. If that gets taken out, then we could be looking at the stock coming back towards 1250 mark as well.
All right, so that's the take coming in on Tech Mahindra. But Lisa, no doubt, Kunal spoke about two power counters, power-related counters that were gaining trade. One more related to power, and that is sulking in trade, and that is Power Grid. How are the numbers for this one, and why such a reaction?
So the numbers that came in were weak. Actually, the revenue, it was muted on year-on-year basis at 3%, but their main business, that is the consulting business, that was down around 46% on year-on-year basis, while the other segments, that is transmission business, that was also flat on year-on-year basis, while telecom business, that saw a growth of 11%. The EBITDA, that remained flat at 9,330 crore, while the margin was steady at around 84% versus 85% seen last year. The other income, that saw a decline. Tax expenses also, that increased at around 17%, and consequently the PAT, that decreased by 5% and stood at 3,600 crore for the quarter. Now along with that, the company has also announced bonus issues, and that is in the ratio of 1:3, and a fundraising plan of around 12,000 crore. But on the weak set of numbers, Power Grid is down in today's session.
That is Power Grid, but let's move on and talk about our textile counter. And Ashesha, Wellspun India today, that's holding on to good gains of around 2.5% as of now. What is the news flow around this? Is it also an earnings candidate?
Well, yes, in fact, it reported its numbers yesterday during market hours. It was during Fatafat that we addressed these numbers. The stock was up nearly 10% yesterday, and we have some management commentary that has come in from the con call that is also quite positive, because of which the stock is holding up with gains of over 2.5% in today's trading session as well. They said that they have started seeing an increase in order inflows that have come in from the United States in the quarter gone by. For home textiles, exports are picking up, and they are expected to sustain in the third quarter as well. They say for second half of the year they are cautiously optimistic, but they aim to achieve 10% growth and EBITDA of 15% at the consolidated level, and they have guided to reduce debt by as much as 1,000 crores for the full year FY24. So the numbers were good yesterday, and now the management commentary is also quite positive, because of which the stock is holding up with gains of over 2.5%.
All right, so that is Wellspun India for you, still reacting to good set of numbers. But Kunal, let's talk about Escorts, and how is this one looking to you on the charts? If you look at the chart for the last 6 months, spectacular returns coming in. And also, if you look at the way how Escorts Kubota has rallied over the last 1 or 2 years also, it's been quite astonishing. Where do you see Escorts India now headed? I beg your pardon, Escorts Kubota now headed?
Well, yes, I think to simply put it, less talked about stock from the auto pack in terms of price performance as well as what the stock has delivered over the last 1 year, the last 3 years, etc., and so on and so forth. But I believe on the short-term charts, the stock has hit some sort of a major resistance or a major hurdle point in terms of indicators at 2550 odd mark. For example, where the stock was trading yesterday, that was a point where the stock formed a bearish candlestick pattern on the daily charts and then met with a lot of resistances in terms of indicators and price level. So I would believe that Escorts could be a tricky stock at current levels. I would not suggest a buy. In fact, I would expect the stock to get into a mild correction of at least 2% to 3%. In case the stock dips back towards 2450 mark, 2460 odd zone, that could be actually a very good level to go for a contra buy on Escorts. So it's a book profit on Escorts at current levels.
Okay, let's move on and talk about Asahi Glass and why is this one in focus is on the back of its numbers. When you look at it, yes, top line saw a growth of 17%, but where the pressure comes in is in terms of the operating performance, the bottom line, that's the profits of the company, that has seen a weakness coming in, and that is why that clear pressure that we've started seeing coming in on the stock as well. As of now, the stock is down almost as much as 4%. When you look at the revenues of the company, yes, a growth of 17% on a year-on-year basis is what we're seeing. The profits of the company, that have seen a decline of around 3% on a year-on-year basis, coming in at 104 crores versus 107 crores last year. Also, in terms of the EBITDA, that is also seeing a sharp decline of around 10%. 199 crores is what the EBITDA stood at, while the margins have seen a contraction of around 550 basis point approximately, and EBITDA margins have come in at 18.4% versus 23.9%. So yes, the bottom line and the operating performance has seen clear weakness, and today we're seeing the stock prices falling in or trade today on the back of a weak set of numbers reported by the company.
All right, moving on, let's talk about another earnings candidate, and that's Butterfly Gandhimathi. That particular counter saw a good uptick of as much as 4.5%, at least last time I checked. And this is on back of its earnings. There you go, the stock has given up all of those gains. As per their profit numbers, they have actually posted an 11% uptick on a year-on-year basis in their profit number, coming in at around 15 crore rupees. If you look at the company, they also posted their revenues came in at around 219 crore rupees. But yes, the net revenue actually saw a decline on a year-on-year basis of about 14%. The company said no doubt they have delivered a profit despite a challenging environment. Also, the fact that they have been able to maintain their market share is the key thing to note, given the fact that we've seen a lot of turmoil of late, especially when it comes to the consumer segment. But yes, Butterfly Gandhimathi was seeing an uptick of 4% at open. You can see that on the charts. They're now giving up all of those gains, trading flat with a positive bias as we speak.
Absolutely, but let's move on and talk about Ipca Labs on the technicals. And Kunal, Ipca Labs, when you look at it on a longer picture, in the last 1 to 2 years, it had not done anything. Only in the last 3 to 6 months, seems like that company has again picked up that bit of a pace coming in over there, especially in the last 3 months, that pickup has come in. What is the view now on the technicals and charts? What is it indicating? Do you think that finally this run-up is going to be here to stay, or again will we be coming back to a consolidation phase here?
Yeah, so there are two ways to look at Ipca Labs chart. One is from 2021 highs when the stock was at 1300 to a point where I think in the month of May, the stock was sub the 700 mark. 668 approximately was the low for Ipca Labs. So it saw a fall of more than 50% or almost 50% from the 2021 highs. Now in the last 2 or 3 months, there has been a dramatic change of price pattern for Ipca Labs. The stock has managed to close a major gap down or fill a gap for itself, which was acting as a major resistance for the stock. It's broken past about 2 strong psychological resistances. One is the 800 mark and the other is today the 900 levels for Ipca Lab. The stock has confirmed a breakout of 200 moving average. So on the back of all of these data points, I'm expecting that this may not just be a short-lived breakout for Ipca Labs, but this could actually be a change of trend for the stock. What matters over here now is the time frame, because traders who are looking to buy the stock at current levels need to have a time frame of at least 3 months to 6 months for Ipca Labs for it to deliver returns of beyond 10% to 15% even from current levels.
All right, that's the view coming in on Ipca Labs. But Lisa, Rail Vikas Nigam, once again this counter seems to be in focus. And what's the news flow? Is it order win once again?
Yes, you're right, Cheryl. It's on the back of order win. They have won around 330 crore order from Madhya Pradesh, and this is for the Jabalpur area. And the time period for this execution is around 24 months. They are on an order winning spree because just a few days ago they had received an order from Haryana Rail Infrastructure Development Corporation, and that was at 1,008 crore. Well, if you look at the stock price, the stock is up around 2% for the month, but that is because RVNL had come out with an OFS. The government wanted to sell around a 5% stake in the company to comply with the shareholder requirements, and now the government stake stands at around 72%. But the stock in the last 1 year, it has moved around 300%. Even in the last 6 months, it has given good returns of around 73%. Well, talking about their order book, it stands at around 65,000 crore. But going forward, the company is looking to increase the order book size to around 1 lakh crore. So that's on RVNL.
Okay, but let's also go across and listen in to Aman Chauhan of Abacus Asset Manager LLP's view on railway stocks. Is he positive? Why is he positive? What are the valuations looking like to him? Let's go across and listen in.
We are positive both on cap goods as well on the railway streams, but within that one needs to be careful, right? So if stocks start trading at 30 times FY26 multiples, that's not a level where one should be looking to invest into these names. There is a good runway. There is a good runway for the next 2 to 3 years at least, because most of the railway stocks are seeing good order inflows. The companies that we have invested, the capacities are booked for the next 3 years. But beyond that, for growth as well as for the existing demand to sustain, continuous flow of railway orders should come in. So while the next 2 years is set, one needs to see as to how the railway ordering pans out. So markets seem to be already discounting FY26 numbers also, and that's what the peak turnover could be. So one needs to be careful. I would not get into railway stocks or cap goods stocks in north of 30p. If something is there around 15-20p, then it should be considered, because the traction is there. The kind of ordering activity we have seen and the kind of modernization that's going to happen in the railways, this is definitely a good interesting space to look at.
All right, that's the view coming in on railways. But Kunal, coming to you, let's talk about ICICI Bank. And if I'm not mistaken, today this was among your top picks as well. What's your take on ICICI Bank and why such bullishness?
So, of course, one of the major reasons is because it's one of the more formidable names in terms of price performance. You know, at a point when HDFC Bank has been a huge underperformer, ICICI Bank has managed to lead the charge from the front. In fact, you know, in the previous month, the May series as well as the June series, the stock underperformed, but it's the start of the July series where the stock picked up pace from 920 to 25. The stock has hit that 1,000 plus mark. So it's slightly below the 1,000 levels today, but I believe that with the consistency the stock has shown in the last 1 month, that the momentum for the August series should also be positive for ICICI Bank. Would expect the stock to head towards 1,040 over the very near term.
Okay, keeping an eye on those levels for ICICI Bank, but Sailesh Rajban, CIO at Equity Investment Nippon India Mutual Fund, also believes that bank have actually led the growth, India's growth story. But will that? What is his view going forward? Let's go across and listen into that.
But what is interesting is if you split the market into good growth and good valuations, this is one space which stands out along with pharma and power and utility space. And here the construct of the banks is, in a way, the ability of them to compound still remains, because the whole investment cycle and all that is in front of us. So in the large cap space, this is one space which has disproportionately attractive risk rewards versus normal. And the balance sheets, as you all know, have been very strong enough. Yes, it's consolidating more than usual. Other parts of markets are performing. But if you look at it, the last 5 years have been the banking story in India effectively, right? So I think after consolidation, banks will, in all probability, become important leaders, along with pharma and power sector as important categories to play in.
All right, let's move on then, Ashesha. Let's talk about Som Distilleries. And if I'm not mistaken, this particular counter hit a record high level in today's trading session on back of earnings.
Yes, but it is off the highest point of the day as we speak, sitting with gains of over 1.5%. Very, very strong set of numbers. Street had high expectations from this counter and it has managed to beat those high expectations as well. For the quarter gone by, revenues came in at about 385 crores, which is an uptick of 52% on a year-on-year basis. Margins have also expanded this quarter to 12.6% as compared to 11.1% that the company had reported in the previous quarter. Results indicate easing of raw material pressure, but if we compare them to historical averages, costs are even now at elevated levels. Company, remember, had announced fundraise plans a couple of months ago. It is set for approval on the 5th of August, and analysts say that utilization of these funds, if approved, could expand capacities further, especially in the Karnataka unit. So yes, very strong set of numbers. This particular counter has been a wealth creator on a year-to-date basis. Today, of course, reacting to earnings, holding up with gains of over 1.5%.
Okay, that is some distilleries for y'all. But on that note, viewers, we're going to slip into a very short break. But don't go anywhere. We'll be back with more stocks after this break.